Hello, friends, and thanks for hanging out with us here on the Market Report today. I'm your host, Benton, and we are joined again by our resident experts, Marcel Peckman and Yashu Gola. Yashu Gola is a financial analyst who has been covering the cryptocurrency industry since 2014, and Marcel Peckman applies his 17 years of experience trading derivatives, options, and futures to the crypto derivatives markets. Guys, a little bit of a relief rally, but things seem to be simmering down a little bit. What's going on this week? How are we feeling? Marcel and Yashu, welcome to the show.
Thanks, Benton.
Marcel, I think you're muted there.
My bad. What I was saying to no one was that the longer we stay above $22,000, the better, because we need confidence. Everybody was fearing that a global crash would take Bitcoin down to $14,000 or $12,000 after Celsius, 3AC, and so many lenders in the space went bankrupt. And even Terra Luna, a top 10 coin, vanished from the industry. So everybody was fearing the worst. And now that the storm has passed by, it's been like 3 months, 4 months since it started, people are starting to get more confidence, but it's not going to end. It's not going to happen overnight. So if we stay maybe another weeks, even if it's goes down to $21,000 or Ethereum down to $1.4 thousand, it doesn't matter. We just need to stick to some ground so to get support, and people will get more confident and we'll go back to higher prices.
And we'll definitely be getting into some of those insights here later on the show, so make sure you stick around. Yashu, welcome back. Glad to have you here. I know you are one of our favorite analysts to have on the show. So what's going on? How are you feeling about the market this week?
First, I would like to thank Academy for this award. But the last week has been more about Ethereum than Bitcoin to me. I have just spent all this time trying to understand what the fork is happening. And so Bitcoin has been pretty boring to me, to be honest. It might be like one of those rare weeks I haven't to Bitcoin at all. So I'll be speaking more about Ethereum this time, and pretty excited to speak about it. And thank you for those nice words, Benton. Always a bro.
Yeah. Well, we have the panel of experts here to answer all of your questions. So make sure today, drop your questions in the chat. We're going to be looking at those and making sure that we get to every single one of them. We want to send out a big thank you to everyone that is tuning in from around the globe. Tell us where you are tuning in from today. We're also giving away a 1-month subscription of Markets Pro, which is $100 value. We're going to show you the 2 tokens that you should have been watching if you would have had the Markets Pro platform. So make sure you drop your Twitter handle in the chat today, as we're going to be giving away that 1-month subscription at the end of the show. Make sure you go ahead and slam the like and subscribe button to Cointelegraph here on YouTube. You can find the Market Report here every Tuesday, 12 p.m. Eastern. So we got first things to go through today is what is the crypto Twitter space talking about? And we got the weekly roundup video to bring you some of the biggest highlights. So Danilo, let's go ahead and run it back. So another big week for crypto. Hacks included, traditional companies getting involved, CZ traveling around the world doing God's work, introducing everyone to crypto. So always good to see what crypto Twitter's up to this week. But before we get into some of the biggest headlines this week, we got some memes for you guys today. So let's go ahead and jump into what do we got for memes this week, Adrian and Danilo. Proof of work and proof of stake.
That's how thin. That's how thin.
That's my shoes.
That's great.
And that's Vitalik. I think so.
Yeah. On the right. You told me you were a millionaire. 200 million Shiba Inu. Classic memes. I bet the thinking is about the moment. I wonder if there will be a new hack when I wake up. That's about right. A lot of news about hacks over the last couple of weeks. My crypto expectations last year, my crypto this year. It's about right with the boats, not a yacht. Nobody's driving their Lambos around. No more assets in Solana wallets, right? Why not? Majority of my assets are there. Yeah, sad to see the Phantom hack last week. That was crazy. We're gonna get into that a little bit later, but good meme nonetheless. All right, I see Try Crypto's smashing the subscribe button. Love to see it. Again, thanks for everyone that is tuning in. Make sure you have your questions ready to go for Marcel and Yashu, our resident experts here for the Market Report. They're here to give you their insights and give you that information you can't find anywhere else on the internet. I know we have some big headlines to get into this week. We're going to be talking Bitcoin, Ethereum, Tornado Cash, U.S. regulating sanctions on Tornado Cash. What does that mean if you are a user on there, and what are the implications for crypto markets? Let's go ahead and jump into our first article though today. So Danilo, if you want to go ahead and pull up this article here. Headlines reading: Bitcoin realized price bands form key resistance as bulls lose 24K. We saw a little rally last week all the way up to 24K, but we came back down to earth. First things here that I want to touch on is Marcel or Yashu. What is a realized price band, and why is this so important?
Well, the realized price, as far as know, it concerns not only about the last trade, but the last time the wallets, the addresses moved the coins. So if you're a holder for a long term, and you didn't trade at 23 or 24,000, your realized price is lower. But we're talking about right now in technical analysis means the range, the volatility over the past, 1 or 2 weeks. So a tighter range when the price is not oscillating a lot, which was what happened over the past days, it tells me that investors are on a wait and see mode. This is especially true when the volumes are going down. So there are less market participants willing to impose their trend, either up or down. So that's not necessarily bearish, as long as there's a support, either if it's 22,000 or 21,000. So if it holds a support level, it's not bad.
Awesome. And Yashu, quick question for you while we're looking at this chart from the article here. Is it concerning to you that bulls kind of got beaten up by the bears a little bit at 24K, or is this kind of the normal volatility range that we're in right now?
See, consolidation simply means that people are indecisive about the next trend. So we just create make-believe psychological resistance and support levels. So just to make sure that we trade within that small range. It does not reflect any long-term opinion. But yeah, when price started consolidating in a very tight pattern, with the volumes going down, it simply means that people are in a wait and watch approach. And most of them are retail traders. They really want some big whale to come in and decide the trend for them. And as what it seems like, even whales are confused about where the market would go next, because we all are watching the macro factors.
It's something else that I want to point out from the article here the writer mentioned something about how the Chinese CSI 300 has been behaving and front running the S&P 500. So kind of zooming out from the macro level real quick, is this something that you all take into account when you're looking and assessing markets? Marcel, I'll let you jump in here first and kind of share your thoughts about what BTC Fuel tweeted out in this article here.
Yeah, man. First of all, there's always some luck factor, some random factor that caused Chinese stocks or Chinese bond markets move ahead or Bitcoin or the other way around. So some of these correlations stands for a couple of weeks or a couple of months, but then it vanishes. But what we've seen as a global trend over the past couple of months is that yes, Chinese, especially the tech sector, have been moving up or down ahead of the broader S&P market. And during the weekends, for instance, where the stock market doesn't trade, Bitcoin has been doing an excellent proxy to understand what the markets will be moving. But that doesn't mean that this correlation will persist for the next couple of weeks or the next couple of months. But yes, that's what the chart is showing us. Chinese stocks have been moving ahead of S&P markets, which has been driving Bitcoin as a sector, as an industry.
In Yashu, I want to ask you, while we're kind of on this topic at the macro level, we saw the jobs report come out this last week for the U.S. It was surprisingly strong numbers. Did this play into the effect of the recent rally over the last week? And what are your kind of thoughts on the most recent job report?
I could agree that Bitcoin was mainly again tailing the tech stocks in that aspect. I mean, because we have also, the jobs report are also coinciding with the earning results that have been very depressive compared to the previous quarters. And when we look at these poor numbers, and even when the stocks rally, it simply shows that people are simply, buying a small dip and waiting to sell at some other point. So I think this again is a bear market rally. Having said that, with your question was about the job increase, right? So a job increase is also, weighs negatively on Bitcoin because that simply means that it gives Federal Reserve more reasons, more leverage to continue their tightening. Because we have heard them from the very beginning that jobs are the most important metric for them before they really take a decision on rate hikes. So this gives them, enough confidence to really continue. And while we are at it, I think we have reacted already negatively to these events, and Bitcoin could keep, reacting to it. So this short-term rally actually does not matter, even in tech stocks or even Bitcoin.
All right. You heard it from Yashu here first, folks. Well, speaking of rallies, I do want to jump into our next article this week about Ethereum here. So institutions flocking to Ethereum for 7 straight weeks as merge nears. One of the big excerpts from this article was actually a quote from Vitalik himself, and I want to kind of read this. So once the merge actually happens, then I expect morale is going to go way up. I basically expect that the merge is going to not be priced in, by which I mean not even just market terms, but even psychological and narrative terms. In narrative terms, I think it's not going to be priced in pretty much until after it happens. So what is your take here on Ethereum? I know Marcel is going to be diving into the actual fundamentals here, but do you agree with Vitalik? Is this not priced in yet? Are people buying this rumor, looking to sell the news when September 19th rolls around? I'll start with you, Marcel.
First of all, Brandon, all these big events that we know there's a set date. It's going to be in mid-September. The merge is happening, and the inflation is going to be cut, and etc. Everybody is watching the same indicator, the same date. So yeah, it's normal to price in earlier of the event. So it's normal for the stock or the asset to go up. And when the news eventually comes out, maybe even the day before, 2 days before, it starts to fade away, to go down, because people already bought on that expectation. So my initial thought is markets are not dumb. There's a lot of smart money, the FTX guys and some other arbitrage traders. So I don't think there's free money out there. People have been buying Ethereum, have been building up positions, but as we get closer to the date, they're going to sell their positions.
And Yashu, where do you stand on this? And do you agree with Vitalik that things are not priced in yet?
I think what Vitalik is trying to say that the merge will grow their entire ecosystem like twofold or threefold because we are trying to make Ethereum more usable for the new projects out there, and this is also about the new players emerging in the market. So Ethereum is simply trying to make its stuff clear that once we do it, we're going to be the number one player. You cannot beat us. And what it simply means, and I'm just talking about the relative organic demand for Ether, because to get into the Ethereum system, you have to demand Ether. That is like the native currency. So, what he's really trying to say, he's just trying to predict this really the best scenario in which everything goes smoothly, the merge is there, and we have like further forks, further updates in the after the merge. So he's just anticipating that there will be enough traction for Ethereum, which in turn would turn into more demand for Ether. And I think even traders right now, I'm not saying all of them. I would agree with Marcel that many people just get into the short term. They want to buy the rumor and sell the news. But the real investors who really see Ethereum, surpassing its own expectations, I think they are the ones who will stay behind. So Ethereum is in a very strong position in the long run. Whether or not we see federal hikes or hell, but we will see a good adoption there if this goes smoothly.
I really am rooting for Ethereum to execute on everything that they planned out because the world would be a better place with lower gas fees and faster transactions and proof of stake. I'm hoping that this event on the 19th is just the start of something good, but we will see how the market reacts in the short term here. You heard the great insights from Marcel and Yashu. So, folks, if you're watching at home today, I want to remind you, drop your questions in the chat while we are cruising through some of the biggest headlines from this week. Because next, what we have is the tornado getting sanctioned by the US. What does this mean, Tornado Cash? If you've used this, what is this? This is a mixer. And so Circle freezes, this is the USDC issuer. Circle freezes blacklisted Tornado Cash smart contract addresses. One of the things that I also want to pull up real quick while I have this is a what I thought was pretty interesting was the quarterly illicit. Oh, I need to unshare here. I will pull that up in just a second here. But while we're waiting, the thing I thought was interesting was the most illicit wallet addresses that were using Tornado Cash were actually from North Korea. And so when you kind of pull up the charts, it'll show you that. But I'm curious to hear, what is the greater impact of USDC freezing and blacklisting wallet addresses, and then the US sanctioning Tornado Cash as a whole? I'll start with you, Yashu.
Identity. They pretty much fall in the purview of all the local regulators, and that's why it's happening. So if there is any hacker out there and they want to use any American-based services, yeah, they are pretty much in a pickle with the governments there. So it's like using a bank in a way. I personally, on an honesty level, I'm not a North Korean supporter, and I'm pretty sure nobody is. So I'm quite happy with this move. But on the deeper level, I think it's also surprising that DeFi apps can also get sanctioned. Once it rely too much on the system. So this also poses a very big challenge for many apps that will follow later. And I'm pretty sure that everybody has done some really shady stuff behind the scenes. So it's simply a message, from the government that it doesn't matter that you call yourself decentralized. We will gonna find you. We're gonna ban you. We're gonna make sure that you're not able to work in America. That's all, I guess.
Marcel, yeah, what's your thoughts here? And will there be any kind of like ripple effect in the greater crypto ecosystem? Is this ultimately a good thing or a bad thing that this happened?
Benton, I think regulation is always a good thing because if your system, your coin or your application is decentralized, it doesn't depend on a single server or a single website. If it's effectively decentralized, no matter what the government's intentions are, they will not be able to ban it. And even if they ban a single landing page, you can create a Web3 version, or you can create another like the Pirate Bay, which has multiple sites pointing to different IPs. So the government will never be able to blacklist or to ban blockchain addresses. It simply doesn't work. And For example, I live in Brazil. The United States government can do and tell whatever they want, but for now, they they don't have any power over me. So when you give those tools of blockchain and decentralized applications on the internet, I think people will finally understand that government doesn't have control over that. So I think it's a good thing that they start to blacklist some address, but in the end, the impact is zero.
Very good. And Danilo, if you wouldn't mind just pulling up my screen real quick, I wanted to highlight a chart that quarterly illicit cryptocurrency received by mixers by source. And so you can see here on the far right side, Q2 of 2022, North Korea-based cyber criminals groups. Looks like the second largest group was stolen funds. So these mixing dApps or protocols seem to be used for a lot of illicit activities, none the least. And so you can see why the U.S. is trying to maybe clamp down and crack down on some of these, at least within their border. But what will be the ultimate effect? Time will tell. Yes. So that is our greatest headlines for this week, including the Tornado Cash hack. We're going to be getting into some of the Bitcoin and Ethereum specifics this week, some of the good nuggets of news that you want to hear from Marcel. And Yashu is also going to provide some of his analysis. But first, we have some crypto tips for you to get into this week. So let's go ahead and jump into that next. All right, folks, you cannot buy the dips if you have all your money invested already. The point should be obvious, but it bears repeating over and over. It is tempting to go all in, but that limits your options. Consider always having some funds on the side to buy an unforeseen downturn. Even if you want to go all in on crypto, leave yourself a little money on the side just in case. If you have an all in and the price takes a hard downturn, it takes lots of options off the table. It's hard to go all in when a coin goes down 60 to 80% over the course of weeks or months. But sometimes they go down even more than that. And it is wise to always prepare for the worst case. So folks, crypto tip of this week is keep some dry powder on the sidelines. You never know when we're going to go down lower. And when we do go lower, you want to be able to get in at those levels. And that's your crypto tips for this week. All right, and I see the chat is lighting up here. So if you have questions, go ahead and drop them in here. But I know Marcel is going to give us his expert insights. So make sure you stay tuned because he's going to give you the goods about Bitcoin and Ethereum this week. And Yashu is going to be able to give his insights as well. So Marcel, feel free to take it away.
Well, Benton, first of all, you should have given me that tip of not going all in 6 months ago, not today. Now it's too late. But so moving on. Today, we're going to cover an article that I posted yesterday on Cointelegraph about the Federal Reserve reverse repo, which recently touched $2.3 trillion, an all-time high. So what the hell is the Federal Reserve doing? Tightening, which means it's withdrawing stimulus from the markets. So raising interest rates and scaling back their debt assets purchase program. Their goal, reduce inflation. The problem is, what caused inflation in the first place? So most analysts will say money printing. So that's the issue, but that's not entirely true. The central bank may issue more treasuries or let financial institutions lend money regardless of their reserves. So injecting more money in the system, yes. But does that mean that those companies, banks, families, mutual funds will be buying products, services, buying stocks, or even hiring more staff? It doesn't mean so. So what is the safest option when you have a lot of cash available? Overnight interest rates. You lend money to the Federal Reserve and get paid for that. That's precisely what's happened over the past 12 months. Danilo, I want to share my screen here. So here we have Federal Reserve repo reached $2.3 trillion. The Federal Reserve will do whatever it takes to combat inflation. Well, that's what they're saying. Financial institutions have a cash abundance issue, and that's the point I want to get. So this is the chart that I want to show you. And you can see that the institutions had $400 billion parked at the Federal Reserve, so lending to the Federal Reserve about a year ago in 2021. Right now, the number currently stands at $2.3 trillion. So that's an all-time high. And what's the Federal Reserve paying those guys for the deposits? 2.5% per year. So managers are unwilling to allocate capital on lending products or taking counterparty risk. Meanwhile, the inflation is running at 8%. Thank you, Danilo. So in short, those guys are paying a 6% per year tax. So no matter how absurd this is, it means that those guys are waiting for some crisis or some market crashes, so they don't have what to do with the money right now. It's just sitting over there. But eventually, the Federal Reserve would stop this tightening movement, so no longer raising interest rates. And investors would no longer fear a crisis or market crisis. And this money will flow to longer-term instruments. Yeah, sure, most of this $2.3 trillion will go to debt and low-risk assets. But even if 0.2% of this money flow into Bitcoin, it means $4.6 billion. So $4.6 billion entering Bitcoin. That's bigger than what MicroStrategy holds right now.
Wow. Real quick question while we're kind of talking about the federal repurchase agreement stuff. We saw the U.S. pass a bill this last week for nearly $300 billion. Is that going to help inflation, hurt inflation? I guess I'm curious to know a little bit about that as well.
Broadly speaking, the more stimulus and packages that they send, no matter if it's for health, if it's for inflation, if it's for Ukraine, if it's for COVID, it doesn't matter where the money is going. The more money that's in the system, the higher the inflation will go. So if they're trying to tamp down inflation, to hold down inflation, it's
interesting. All right. And Yashu, I know you have some thoughts to share in some of your analysis while we're here talking about the impacts of the Federal Reserve on Bitcoin. I am very curious to hear what you have to say with some of your analysis this week. So feel free to jump in here.
Thank you, mate. I would first like to really thank Marcel for bringing out this amazing analysis, because I had not read the article. This was the first time I'm listening about it. And it pretty much, actually, I'm very happy to hear that, because it pretty much matches with the long-term thing I always talk about, that we really have to look at a long-term game in Bitcoin when it really is about investing. It cannot be an asset you can simply hold for a day and just sell out. But unfortunately, what I bring right now is a short-term analysis. So I just want to say that despite all these amazing predictions, we are still in a bear market. The reason is because we have already confirmed that the US GDP, it's already down like 2 quarters in a row, which makes it a technical recession. And on the top of that, we have good news, which is very rare. But like we discussed, the jobs have increased by 528,000 in July. And now it is at the pre-pandemic level. And at the same time, we are looking at wages. The report has come out that the wages of American, they have grown by 5.2%. So in a way, we are trying to match inflation by raising the wages. So I think it's still a good news for everyday common Joes in America. But at the same time, we have some alerts. There are some economic indicators that show us a very different pictures. That is called job openings, because they have been declining in the last 6 months. The weekly jobless claims, for example, they are increasing. So it simply shows that while we have a job increase, at the same time, the jobless claims are also going up. So these things, they are quite in contrarian indicators to each other. But we really have to see that we are still in a technical recession. Again, there is one thing I also like to point out, because the jobs are increasing, it gives, like I said, Fed enough leverage to just continue with their hawkish plan. The way it seems like they will go ahead, they will keep hiking the rates, and they will keep cutting their balance sheet off. And that was the core reason why we entered a bear market thing. So I personally think that for this year we will look at more losses in the Bitcoin and Ethereum market as well. And I would like to actually uh, illustrate that with a chart as well. So as you can see, guys, this chart is showing we are looking at this latest rebound right now, from around 17,800 to about to 23,000. We have this 38% rebound, but it is a very small rebound, so we cannot actually call it a bottom, because we have seen similar bear market rallies in the January and March session. It's like 46%. And I'll take you back to one of the biggest bear markets in Bitcoin history. It was in 2018. We actually saw a 100% rally here. From this to there. I mean, we have been noticing these big rallies, but despite getting these amazing upside corrections, we are going down. We are going down all the time because there is a very big fundamental factor at play. Back then, it was supposed to be the ICO bubble burst, but right now we are looking at a macro bubble burst. The macro bubble created by the unlimited money injection by the Fed and other central banks from around the world. So as long as that is not done, we are not looking at any kind of stoppage from this thing to fall down. On the top of that, you might see this blue curve, which is a 200 exponential moving average on a weekly chart. This thing I've already repeated many times, that this has been an incredible support to call out bottoms, but this time in this bear market, the bottom angle simply broke and it just fell down. And right now it is trying to reclaim it as resistance. And as long as I think we stay below this psychological resistance, our probability to go down is very high. So yes, right now we are looking at this. This is near $26,500. So yes, I can see Bitcoin going to 26,000. But whether it would continue from there, I don't think so. I'll stop the stream. Thank you.
So where will Bitcoin continue to range in your opinion, let's say for the next 6 months, and will there be any major catalyst that you're seeing that could potentially push it up beyond 28K?
I would go with what Marcel said. Yes, there has to be a bottom, and my personal what I think is bottom is around $10,000, because in the we will see rate hikes in September. That is, the economic projection is like they will again raise the interest rate by 75 bps. So it will keep happening. But as I had already mentioned, that I am personally waiting for the midterm election to come by, and that can be a very big game changer, because the polling actually shows that Joe Biden can lose this election, which is why we are looking at this inflation bill stunt. But eventually, because of all the problem that is happening economically and in the world, and his ratings are low, a small midterm loss election can give Joe Biden a reason to restart quantitative easing. Ask the Fed to just calm down on the rate hike plans, because, like I said, we are in a technical recession, and it's not going to show right now. It's a very gradual process. Maybe in the next 12 months we'll realize it, but we will realize it.
While we're on the topic of recession, you heard folks like Kathy Wood come out, Elon Musk come out and say they're expecting a mild recession. Sometimes it's really hard to know if you're in a recession until you're able to look back and say, hey, that was a recession. What is your take? Is this thing as mild as Kathy Wood is saying or Elon is saying, or could this become even worse than we could expect?
First of all, I'm a very small man, Ms. Katie Bird, and I and Elon Musk. Thank you for bringing out your side, but yes, you are in losses right now. Look at how ARK is performing. You have over leveraged yourself. Am I talking directly to them? They're going to kill me, I know, but you are in losses. You really want this to end. I can understand, but the fact remains, it's the same, because it's a very turbulent time. We have a war in Eastern Europe going on, which can lead to big recession, a big inflation problem in entire Europe. The winter is coming, as they say, right? I mean, one of the Germany's leading power companies, they had to call bankruptcy, and now they are being bailed out. China is going through real estate implosion right now. There are bad news everywhere. And how can you say that we're gonna just be fine? It's like that meme. The dog is sitting in a room and he's having a cup of coffee, but everything else is burning. Yeah, we'll be fine. But yeah, I think I've overspoken about this. But you get the zeal of it. But I'm trying to say, how can you say that there's not going to be a recession?
Yeah.
We are looking at
Wait,
layoffs,
and
guys.
Marcel, what's your take here? Are Elon and Kathy Wood just trying to protect themselves or their companies and hope for a mild recession, or do you think this the bottom is not in and things could potentially get worse?
Yeah, I kind of agree with Asho here. If your company, if your investment is on the line, you're never going to go on national television and say, hey guys, things are much worse than expected. Prepare for a big crisis, because a single mention, a single speech from a guy like Elon Musk could drive the markets down. So I think they're trying to downplay what's happening here. But the focus right now, in my opinion, should be housing, especially in China sector. Because if housing prices go down, then the population who have mortgage to pay, their value of the house will go down, and the money that they can withdraw on the bank based on their holdings goes lower. So it can start a crisis similar to what we've seen past in 2008. So right now, I think the focus should be housing price.
We see Shalom saying wars are inflationary, famines are inflationary, plagues are inflationary. So we appreciate you sharing your thoughts there. And Yashu, I know you have some stuff to cover about Ethereum this week, and we've talked about buying the rumor. But I'm curious to see if you might have any charts or any other thoughts that you'd like to share with us about Ethereum while we're on the topic this week.
Well, Ethereum charts are quite beautiful. Actually, I'll show you just in about a minute. But okay, let me find it out. Sharing screen, Chrome, and share, guys. So I hope you can see this. Okay. So Ethereum has been vastly outperforming Bitcoin, and the best thing about it right now, sorry, uh, I'll just reload this chart again. Yeah, give me a sec, guys. At USD, Binance. Yeah, so we are back here. Like you can see that Ethereum technically has actually crossed over its 200 EMA, the same resistance level that is capping Bitcoin's upside attempts, its entire bullish thesis. Ethereum is already like trading around it. It's already up there, and of course, it's because of the merge, because of all the euphoria surrounding this, major switch to proof of stake. But there's one more thing I really like to talk about are Ethereum folks, guys. So first, I'm going to stop this chart because it's more like a verbal thing. So what's really happening right now? Because we have a new narrative on the top of the merge narrative, that the merge can lead to the creation of multiple Ethereum blockchains. I remember, I think Gallows Capital, a crypto fund, they did a poll last week, and 33% people, they agreed that there will be a fork, there will be a new chain that will be a POW version of the current Ethereum blockchain, while they go ahead with their POS. So as had we have seen that, people want those free tokens. What's really happening is that people are collecting this Ethereum, accumulating Ethereum, so that by the time they can be a potential fork, they can get this new ETH POW token as well. So it's like a free money for them. And why this narrative is picking so much momentum? I mean, look at the last 3 days, guys. This token does not exist now. I mean, there's no fork. But we are looking at BitMEX, we are looking at Poloniex, these crypto exchanges. They have already started listing futures and spot trading. So basically, what does not exist, you can actually trade it for somebody that exists, like USDT or maybe Ethereum. And Vitalik Buterin in one of the conferences recently, he even said that many people with exchanges, they are trying to encash on this opportunity. So this narrative, this entire narrative, that is actually gonna pump up some more money into Ethereum. Why? Because people want free tokens. They want those airdrop tokens. But I cannot even explain that once we are past the merge, once we are through it, there can be a very big, downside. I'm expecting 20 to 25%. I mean, of course, in addition to all the macroeconomic factors, but we have to see, a sell the news be a run in the future. But yes, up to the merge, I'm pretty bullish about this Ethereum. That's all, guys.
All right. Very good. Well, we appreciate both of you sharing your insights to the Bitcoin and Ethereum and what's going on out there in the world today. One quick question from the chat. I see Catherine Rhodes. Thanks for submitting your question. She says, I know you don't give financial advice, but hypothetically, if you had some fresh fiat to invest, where would you put it? Is there any particular market segment or niche or maybe a basket of cryptos that you might be looking at right now? I'll start with Yashu first.
Oh, well, I don't actually trade like that personally, but because my time frame for investment is actually a year. So I don't know if I can give you any near-term advice. Sorry for that. But yes, if you are talking about in a year, I would say that you can stay connected to Ethereum, you can stay connected to Bitcoin, and even Solana, despite all the problems. I mean, Solana, because of all the negativity around it, and what can be and their efforts to really calm it down by introducing new features, I think Solana is still undervalued. So I would recommend that if you have some dollar to spare, you can actually invest in these currencies for 1 year. That's my
Very good.
not
And
a financial
Marcel,
advice again. Yeah,
none of which is financial advice, but go ahead, Marcel.
exactly.
Man, first of all, the person needs to understand if they are able to take a 40% drawdown if markets continue to tank. If that's not what's up to them, if they think, no, crypto is too much risk for me, just stay away. Go for stocks, go for bonds. There's an infinitive there's even real estate investments. But if you think that, yes, I can handle a 40, 50% drop from here, and if you're new to crypto markets, I'll stick with Bitcoin. Normally, I would say 70% Bitcoin, 30% Ethereum. But considering what's happening on Ethereum right now, and if you're new to cryptocurrencies, I would say stick to Bitcoin. But if you cannot handle a 40, 50% drop from here, stay away. Choose another investment.
All right. Thank you all for sharing your thoughts there. And I know Yashu had brought up Solana, and there has been some interesting things happening over in that ecosystem that we're going to tackle today. We saw Nomad Bridge fall prey to exploits, losing millions. But then I just read a headline that white hat hackers recovered 30 million of the funds, which is great news to hear. Solana-based wallet, Phantom, what got hacked as well last week. So what is going on with this ecosystem right now? And I know Yashu, you said that you feel it is undervalued, but I guess I'm curious to know first, what makes Solana so susceptible to hacks?
Because it was never hacked. Who says that?
I'll go
Okay,
ahead.
Marcel, you want to
Yeah,
continue?
Marcel, why don't you jump here first and then.
Yeah, yeah.
Okay, so I'm not a security expert, guys, but the Nomad Bridge hack is not a Solana network issue. A similar thing happened to Harmony a couple months ago, as the Horizon Bridge lost $100 million. And you can remember the Axie Infinity game, the Ronin Bridge, lost over $500 million back in March. So those bridges that interconnect different blockchains, they need some kind of trust mechanism. And the users are reckless. So it's not a problem of the Solana itself, but it's a problem of the bridges.
Exactly. I would agree with that. And Yashu, what are your thoughts here on why Solana is so susceptible to hacks?
Like Ashley was trying to say that it was never hacked. And blaming Solana for these wallet hacks is like blaming the president for a car theft in New York. So you cannot actually go after Solana like that. But similar, I can just say that Solana has gotten unlucky because they have had one bad news after another, and because of that, we are just looking at, and unfortunately, it has gotten in the headlines of so many mainstream news websites. Solana hack. So the interpretation people can get is like it's Solana that got hacked, Solana network got hacked, and it just resonates with, oh my God, they had an outage. So all these headlines that are coming up, I think they are just doing a disservice. Um But instead, I think it is the services that are being hacked. Slope volatile, as it seems, they did not safeguard their users' private key with cryptography. That is a pretty basic thing. Somebody just attacked their server and stole those simple to read English seed phrases. So how can you blame that on Solana? I mean, I don't know what Solana could have done about that.
It seems like they have fallen victim to just being associated with the ecosystem or someone that was building within their ecosystem. Then it therefore associates it with Solana. So
There's
I can
also,
see.
this crypto wars actually, I'm sorry to, but there are crypto wars going on. One Cardano guy just blamed the Solana. Solana says something about Ethereum. So there's a lot of negativity that keeps going on. When one things get hacked, they just attack the network. Oh, it's bad. It's, you should not invest in it. So there's a lot of like, campaigns going on around about every project actually.
I could imagine. So I guess, Yasha, you mentioned that the downtimes, we all know Solana Network has had its, let's call them growing pains over the last couple of years. We'll kick this back to you first. Why has the Solana Network had so much downtime in the past? I'm curious to learn more about this.
Well, it is the same problem. I mean, are you prepared to handle transactions? That is it. That is one thing that really defines that whether a blockchain would be able to, would be able to have these outages or not. So I think it is an incredible defeat because Solana has more than 20 outages cases in a year, while its rival Ethereum has none in the last 3 years. So of course, their network was not designed to cater for transaction, and I think they have a limit of 65,000 transactions. So network did not know how to take care of bot attacks. I mean, that's what happened. If I just quote one instance, the outage that happened in April or I think early May, it was happened because there were a lot of bots. They were trying to mint an NFT on Solana blockchain, and they kind of like 100x the transaction counts. So of course there had to be outages, and that is why it got just down for 7 hours or more. And this is actually ridiculous, but yeah, that is it. They have to really work on it.
All right, so maybe it's just part of the growing pains. Is not actually a downside to the network. Now, what do exploits in the Solana ecosystem mean, Marcel? And I'm curious to learn from you what do these exploits mean?
Well, Benton, first of all, I don't buy this growing pain theory. For instance, Ethereum guys, the ecosystem as a whole, they think, well, we should build and use the systems as we're building. So we're kind of getting to know how bridges work and getting to know how the DeFi system works. It's a great attitude, but you cannot place like $10 billion on a DeFi application that's still being developed. So Solana is doing exactly this. They're trying to develop and invest huge loads of money at the same time. So it doesn't work. So the main issue with Solana system is centralization. So there's a low number of developers and ecosystem players building all those ventures. There's only maybe a single or two stable coins. And in Ethereum, you already have over 10 different stable coins, over 50 different DeFi applications. So there's less risk. So Solana is too much centralized. I can't hear.
Yashu, you were shaking your head. Do you agree with Marcel here? And what is your take as to what do these exploits mean in the Solana ecosystem?
I totally think that every new POS that, proof of stake service that comes into view, they first rely on centralization. And I think somebody just wrote that it's still in a beta mode. The only problem is that because we are invested very early in a project without even seeing that if it can prove itself or not. So there's a lot of money, being poured into a project that is still in its ideation or in a beta stage, and that is always a problem. But yeah, centralization is important at that time because they really need to test the systems, in the sandbox environment and health. But the problem is they have already taken money for that. There are people already invested to it. Otherwise, if you look at any random startup, they do the same way. They fail, they learn, they fix it, and they come back. But the only trouble is that people are invested here. So there's nothing wrong in failing and just there are always step backs. Ethereum had a step back in 2016 when DAO was hacked, but they overcame it. But the thing I'm trying to say that it is a proof of stake system, and Ethereum is a POW. Even now, it's a POW system. POW is actually far more secure, so that is why we have not seen any, incredible outages. Yes, there have been DDoS attacks, but that has not impacted the chain itself. And Ethereum also has a fee system in which you can actually, put up your transaction fee, and the miners will actually give you But when you include bots, and when you don't have that transaction fee system, where you can actually prioritize your transaction, the bots can attack you. Solana has suffered something similar, which is why they're also trying to change this mechanism by learning from it. So, which is why I say that it is getting a lot of heat, and but again, if Ethereum turns into POS, who knows if we see the same problems in that network? That's what I'm saying. It's not 100% scenario with POS.
Go ahead, Marcel.
Yeah, Wrong Again is saying on chat that Solana is still technically in beta version. Dude, you cannot have a $10 billion TVL network with hundreds of venture capital funds piling money and say, we're in beta, sorry, we're doing mistakes, we're learning as we go. You shouldn't be offering those products to retail investor if it's still in beta. For instance, Lightning Network, everybody tells the users, do not put over 100,000 Satoshis over there. It's still in beta, it's still developing. There's no billion-dollar TVL. There's no company inserting $100 million to provide liquidity in channels. It doesn't work that way. So either you're in beta and you work small and you announce it to the retailers that they shouldn't put too much money, or you release the ready-made product. You cannot do both at the same time.
Yeah,
Yeah,
so
but
I guess that
that
brings
is
up
the
the next question.
unfortunate. Yeah, I'm sorry. That is the unfortunate thing in crypto sector that we give money too early, just by the hype.
People want to get into this technology early, and some of it's very young and nascent. So I guess should Solana holders or Sol holders be worried at all, Marcel?
Well, Benton, let's go back in time. So what caused Solana to be a top 10 crypto? Let's be honest here. The project was dead before Sam from FTX took it under his wings. Then, after the necessary funding for the ecosystem development, which includes expensive validators for the proof of stake network, there were some venture capitalists, some funds with deep pockets, spend money on marketing, DeFi liquidity, and incentives for games and Web3 applications and users, developments and users. But there's a problem here. It is not sustainable. So either those VCs, those venture capitalists, will be able to sell their positions at a large profits and move on to the next deal, or the developers and the users will be constantly seeking incentives to stay on the network because a competing chain is offering more money. So a similar movement happened in the past for Tron and EOS. So I don't think it's sustainable what they're doing to Solana right now, my opinion.
And Yasha, where do you fall here? Or if you're a Sol holder, should you be worried?
I believe every crypto holder should be worried. Yes, because whatever that has happened with Luna, it was just a so-called amazing project. It was just going in the right direction, but suddenly everything crashed. We don't know about the vulnerability until it really happens. So yes, there is always a very incredible risk, associated with these tokens. But it's also my job to really, look beyond it, because I can talk about the same thing every time that yeah, there's a risk, but I also want to see that if Solana is doing something about the existing problems. So I think Solana is. They're really attempting to resolve the issue with its, they have a new series called V1 series, and they have added various stability and performance improvements to address the network congestion experience on the mainnet. So this series actually introduces a QUIC. It's actually a feature that allows block producers to instruct bots to propose only a small number of transactions at a time. So it simply means, in other words, in very simple words, bots cannot take control over the network. which was the core reason why these outages were taking place. They could not take care of it. Now they are trying to take care of it. They spotted the problem. They're trying to solve it. And there's another, feature in this V1 series. It's called quality of service. So what it does is it actually focuses on fee prioritization, the one we already had in Ethereum. And so, like any other network, I think Solana will now focus on the transaction that is offering higher fee. So bots, of course, their entire purpose is to simply limit bots from taking over the network. So, which is why, despite of all the hoopla around, it can be a long-term risk. I think they are going in a right direction as a project.
Very good. That's new stuff that I have not known about the Solana ecosystem. So I appreciate you doing a deep dive there, and Marcel and Yashu sharing their thoughts about what's going on with the Solana ecosystem. So thank you guys. Want to quickly turn to the chat and let you guys know we're giving away that Markets Pro subscription, $100 of value. Make sure you drop your Twitter handle in the chat today, which brings us up to our next segment this week. We have our 2 tokens for Markets Pro that you should have been watching this week. So let's go ahead and get into our Markets Pro segment for this week. All right, newsquakes. That's what happened this week. If you watched the show last week, you also saw us. RAD was on the alert system for Markets Pro last week, and it happened again this week. So what happened? Well, the newsquakes, if you're not familiar with them, are the automated alerts that instantly notify users when market moving events happen. This week, Markets Pro subscribers were alerted to the news that Binance US would list RAD. The notification was sent out when RAD was trading at $2.43, and it quickly jumped to $2.63. That is a 9.8% increase in just a couple hours. You can see there on the chart, we have a huge newsquake. Actually, it's 17%. Newsquake, and then the white price line goes all the way up with that 17% gain. You love seeing the big gains after those newsquake alerts, and that's the power of the Markets Pro app. The next coin that you should have been watching this week was based on the Vortex score. And if you're not familiar with the Vortex score, it is a comparison between its current market and social conditions of those in the past. What happened this week? Well, Digibyte, folks. Toward the end of the week, green Vortex scores flashed for DGB. These scores inform Markets Pro subscribers that trading and social conditions around the token were similar to ones from the past that preceded bullish price movement. Not long after the scores flash, the price climbed 12%. Big gains during these bear markets, and that is why you got to get Markets Pro, folks. And we're going to be giving away that 1-month subscription. So make sure, if you haven't dropped your Twitter handle in the chat, we're going to be giving that subscription away at the end of the show. And that is our Markets Pro segment for this week. All right, guys, I want to get some closing thoughts from you all today. What would you like to leave our audience with first? And I'll start with Marcel here.
Well, my point is, remember, there's people in Venezuela, in Argentina, and Iran that is either going through hyperinflation or government sanctions, like they can't send money abroad or receive money from friends and family, or even provide services. People are getting their GitHub accounts shut down. What's happening to you? What are you going to use to circumvent this? The importance of cryptocurrencies, and not only Bitcoin, the decentralized applications as well. So understand that for you that live in Europe, that live in Brazil, that live in the United States, maybe cryptocurrency is a little game. It's something that's not much relevant because you have a strong currency, because you have liberties. But those can be taken down any minute, and you're gonna need cryptocurrencies whether you want or not.
Excellent thoughts there. And Yashu, what would you like to tell our audience here with your closing thoughts this week?
The guys, like I said, the winter is coming. It is coming. We have talked about recession. So it is very important, guys, that you stick to your cash for a while. You don't have to, invest money anywhere you feel that's going to be a risk. Because right now it's the best time to really hold on to your savings. You try to save as much as you can. And if you can actually afford to invest, if you have those $2,000 which you can actually spare, which you're not going to use anywhere, please go ahead and listen to Marcel. please buy something that can protect you from this inflationary pressures, that can protect you from the sanctions and whatnot. So many things are happening in the world, and we cannot actually cover in this section. But yeah, stick to your cash. You don't know what's going to happen. The cash will help you in the end. So yeah, that's going to be my advice.
All right. Thank you guys for sharing your closing thoughts for today. I want to go ahead and give our winner for today's Markets Pro subscription from the chat. I see Try Cryptos today was chiming in a lot. So the at TRYCRYPTOS, Try Cryptos. Thanks for tuning in. And all of you tuning in from around the globe today, we appreciate you coming and hanging out with us here on the Market Report this week. And we would love for you to like and subscribe the Cointelegraph channel here on YouTube. So until next time, folks, make sure you tune in every Tuesday, 12 p.m. Market Report. Until next time, thanks for tuning in.